A pullback for the previously robust dollar has largely explained dollar's latest move, as the two have enjoyed an inverse relationship for the bulk of the year. What's your outlook on the dollar trend then? And in the near term, do you think it's going to push back?
I think the dollar is going to start to make a larger correction lower in the months to come. The recent sentiment has gotten very, very optimistic and very bullish on the dollar. Historically, when that's happened, the dollar has had a difficult time rallying. So the majority of how I look at the dollar has to do with both technical trends and sentiment. Right now, the trends have been bullish for the last few months, but are starting to show evidence of gradually waning. Momentum is getting less and less robust on all these rally attempts. And we've seen a little bit of a rolling over in the last 5 to 6 days where the dollar has started to move literally straight lower. So I think that is the start of potentially a larger pullback for the dollar. So I think that should benefit commodities. I'm a lot more bullish on commodities in the second half of the year and into 2019. I think that precious metals have been under substantial pressure. Gold has had a very difficult time. Sentiment towards gold is almost the lowest it's been in 20 years. So we've seen the CFTC, the Commodities Future Trading Commission sentiment poll come out showing that speculators right now are really at the lowest level of exposure of gold they've been in some time. Seasonally speaking, we're getting into a very bullish time also for gold. So I think gold can rally in the month of September into October. I'm short-term optimistic, but we need to really show evidence of getting above 1270 at a minimum to think that gold can move up to its prior highs, which were seen earlier in the year, last year, which were near 1370. And that's really the bigger line in the sand for regards to gold. But if the dollar starts to pull down in quicker fashion, that should really be beneficial for commodities based that they're priced in dollars.
Markets will be fixated on the always important annual Fed symposium in Jackson Hole this Friday. Do you think that the meeting could create more than the usual late August volatility? And what are you expecting most from the meeting then?
Well, it's rare that any major policy decisions are announced in Jackson Hole. A lot of people like to discuss Jackson Hole. I think there'll be discussions with regards to how growth prospects are coming along in the wake of potential tariffs and a trade war, but I don't think that any of that will be, no major decisions typically are made at this get-together. So I expect volatility in the month of September for completely different reasons that have nothing to do with the Federal Reserve, and we've seen some evidence of that in markets just based on seasonality. Momentum and breadth have been weakening of late, and technology has started to show signs of pulling back. Technology being 26% of the S&P, that's a problem when it starts to fall, and that's been one of the driving forces beyond the rally in the last year. And so if tech is going to slow down, that's really the one thing to watch, more than expecting that anything would come out of Jackson Hole that could really hurt the market. If anything, any sell-off that comes from a perceived announcement and what the public thinks could happen with the Fed normally is a chance to go the other way and bet against it. The Fed has been very clear in its intentions. Jay Powell is somebody that the markets trust, and he's not willing to really consider any of the presidential drama before making his decisions. He's going to continue to hike rates if the economic growth is on track. And so the odds right now stand at a greater than a 95% chance they hike rates in a few weeks in September, and more than a 70% chance in December. The only way that really gets derailed is if the stock market experiences at least probably a 10 to 15% correction, and I think that's unlikely. I think we'll probably see 3 to 5% in the month of September, and it'll be a buying opportunity. Sentiment will turn bearish very, very quickly based on the combination of a potential trade war along with the political drama. That'll make people fearful. That'll create the uncertainty that oftentimes is a very good way to put in lows in the market.